Hello, this is Cryptolyze. I hope you are well this September 9, 2023. Today we are going to talk about the weekly closing, which is very important, which actually shows the problems we have with BTC. But we are going to go further than that. We are going to really ask ourselves the question in relation to the macro, what is happening? We know that next week and the week after, it's going to be complicated. We're going to have big decisions that will be taken by the Fed. Are we going to increase rates or not? The goal is not to say yes, not to say no. It's not the very principle. But above all, it's to understand the issues that are currently taking place and what is going to happen at the level of the BTC. We are starting to see indications that are being made, whether at the crypto level, whether at the macro level, which are explaining to us that the market has already more or less made its choice, and I will explain all this to you. I will explain my analysis, my point of view, and it will start right away. We will start by recalling this calendar, a calendar which is really important. On Wednesday, 13 September, we have the CPI, which will determine whether or not inflation has taken a hit. We have a forecast of 3.6 versus 3.2 previously. So that means that we would have an increase of 0.4. On this, we would have an increase in general inflation, which would at the same time be consistent with the 2 months we experienced, July and August, with inflation and the increase in the rate of oil. Keep that in mind. We'll discuss it later with the graphics. And above all, what is going to be really important is going to be the monthly producer price for August, and then we are going to move slowly and tenderly towards the low and the increase in rates. It is currently set at 5.5, and it is more or less for those who remember and who have really followed the channel for a long time. It has been a year and a half since I told you that the maximum rate, finally my target of rate was 5.5, 5.25, 5.5, and that going above it was going to be complicated, and now it's going to be really the decision. We need to understand two things in relation to this. Yes, we are going to increase rates. Will the increase in inflation lead to an obligation to increase rates? Or are we going to stay on a 5.5 rate for a long time? Therefore implying a plateau which risks lasting longer because the increase in rates. It is not the increase in rates which actually has an impact. It is the fact that the rates are high makes an impact. So the longer we stay at high rates, the more the impact on inflation will play out, and the more the risk of recession will increase. And we are going to stay with this idea that I have already defended several times on the fact that I tend to think that we are going to have a recession in the USA, a recession which will be short, which will be controlled, and behind which we will be able to start to rise again. And at the same time, what is logical, that is to say that when we have a vocation to reduce inflation, we know that the best way to get there, especially when we have a truly economic shock like we experienced there through the shock of energies, the only way to be able to control it is to go through a recession phase. And that is a recession phase which can be relatively short and relatively controlled. And it's not annoying, and it's a little bit what I've had in mind for some time now. And that's why I think will not necessarily increase the rates in any case from 0.25. And that is a little bit of what is successful in the process of being priced, and that's what bothers me too, and we'll discuss it in a few moments. So we're going to go straight to the graphs. We will start with this curve that I show you regularly. This time I made it poorer. I removed the notion of jobs, but I really kept the two important points. And I think it is important precisely to concentrate on the essentials. What is the main thing? This is the inflation curve, which is here in light blue, and the rate curve here, which is therefore in dark blue. We see that we really have this acceleration of increase in everything, which is really the strongest that we have known in the history of the United States in terms of speed of acceleration, and we are stopped on a level of 5 minus 5. We only stopped for a very short time already. We really stopped for a very short time. Next to that, we have falling inflation. There we have an increase in inflation, and normally we should increase here potentially going for a 3 to 6. The question we are going to have to ask ourselves is that we are not going to have the answer this month, and that is why I think we will not stay at 5 minus 5, because what is the Fed currently waiting for? Wait to find out if we have an economy that is in trouble, which is starting to suffer. Therefore implying PMI, implying the unemployment rate. Do I have an unemployment rate that is rising? Already last weekend we analyzed this part. We saw that the unemployment rate, even if it remained at a plateau, still had something that had an underlying trend, which was starting to rise. So we're starting to see signs of, indeed, there is an impact here in terms of rates. So that means that because that's clearly what's expected, the answer will be, will we have inflation that will stagnate or even increase while we enter this plateau phase? And that's important to understand. And that's a bit of the idea I have on my side. That is to say, I think we are going to be in a plateau phase. We are not going to increase At worst, we can increase from 0.25, but not even that. I really don't think so. We're going to stay at 5.5. We will see here inflation, which will increase a little bit and which will perhaps stagnate during the month of September. So August, September, and potentially October. And again, it is not sure within particular. Afterwards, we will have to see, is the weather going to play a role or not? Are we going to have a winter that is going to be very, very harsh? Are we going to have complexities, therefore energy consumption additional, and therefore at that time inflation, which risks worsening through this? The metals vector will be really decisive, but I think that we will potentially have a plateau here in terms of inflation, and then we will go back down to around potentially 2, 5, 3% to stay in this zone. And here, we're going to have the shape of the board and the implementation of something that's going to be like this. So it's going to be what we call the pivot. This is where we will really have to be very careful. It is the implementation of this pivot which will be decisive. Let me explain. From the moment we enter a form of pivot, so at that moment we will reduce interest rates, this is where we will have to monitor inflation. Is inflation remaining stagnant or increasing? If we increase, it's a very bad sign. And second thing, if it even remains stagnant and we have alongside the other elements which are starting to panic, mainly with the PMI which is falling, the unemployment rate which is increasing, well then we will have in fact a signal which will tell us that we are going to enter a recession, that it is certainly a recession of 6 months, 9 months maximum, in which we will really have an impact on values. US, so that is to say S&P 500, NASDAQ, we will have a pressure which will be exerted on the economy of the whole world, but it will be something which will be rather controlled because at the moment we has already made a very strong part of cash. We have already liquidated a large part. We have on the side consolidated all the same. Despite what happened with the U.S. banking sector, we have still consolidated a large part of the Fed's debt. Well, a big part. Everything is relative. We agree. We have cleaned up, in fact, this approach. But I don't think that we will have an overreaction from the Fed. We will rather have something which will be moderate, in which we will not necessarily have a printing press, which will feed itself from the same way as before. I think that we are in something which, a form of torn, which is totally different with several things. It is that one, when we look at what is happening on the DXY, clearly we have something that is playing out on the dollar. We have a ROTES, which is in the process of carrying out. We have the establishment of BRICS, which are taking up more and more space with dollarizations, monetary exchanges. In terms of oil, we have oil which is growing and which is rather logical technically. Here we see that we have really broken through this zone of resistance, which has held us for some time. We even did a little pullback, which was very interesting, and then we had the acceleration too. Clearly, we are going to retest the following resistance, which is at $93. There is nothing abnormal there. We are no longer in a process right here of a retest, which would be in a continuity where we would have the establishment of a range. We would be at the bottom of the range, which would be here, which is rather coherent, in which we would have the middle of the range here. So we oscillated at the bottom of the range. We broke the middle of the range. We retest. We're going to test the top of the range to go back down, potentially. Retest. Here we are in something which is rather classic in the forms of cycles. So that implies that here we have a pressure which is very strong inflationary, that we are going to return to these levels of 80 or even to the levels of 70 or 60. So which is more of a cyclical thing. There we will actually have a drop in inflation. Is it going to happen right away? I don't think so, but it will certainly happen at some point when we need it. You will see. Certainly here we will have the establishment of a top, a breakout. If we look in relation to the terms of the week, we should find ourselves in the top in about a month. So really where we will validate, is it yes or no, we are in a plateau in terms of inflation and then decrease. But therefore we have a real pressure which is rather international, which is placed on the USA, which impacts on the dollar. And therefore inevitably we can no longer enter into an approach as before where we still had the USA, which were really dominant, even if the USA is still dominant. But we have a form of pressure that is being put in place, which precisely requires a form of precaution in terms of the dollar. And that's why I tend to tell you that what's going to happen is going to be a little more different than what we've known. I don't think that we will necessarily have a recession which will send us an SP 500 in our socks, which will send us a NASDAQ. So here we will go back, hop here to weekly, which will send us a NASDAQ to a lower level. I think that we will have a real retest, which will potentially be the rupture too. That is to say that we experienced at the level of the NASDAQ. Therefore, something which will retest between the 12.0 and the 13.0, therefore potentially the 0.5, the 610, even with a little touch on the 786. But we will, yes, a form of recession, we will have an effective retest already initially. I think it would make sense to retest 382 for 13,800 with something that's already forming. When we look at what we have here a first bearish leg, retracement, second bearish leg. We take classic Fibonacci. We take the first acceleration, we do the retracement. What does that give us? 618, we see that we are in the 13,600. So we would already be in a dynamic which will do something which will retest the 0.5 with a wick. We swallow the wick and we close at the R618, which would make perfect sense. Here we have the 1, which is between the two, which corresponds more or less to the gap. So we could have a 1-1. Besides, it is not there. We are going to put it back straight away. We could have a 1-1, which is positioned, therefore, which is in fact an overextension of 1, which is rather logical. With a wick that would reach as far as 380 and which would be swallowed up. Why not? But we are not yet in this process. And then we know that in all cases, the market itself will in fact price this recession about 6 months, 9 months before. Can we consider that this retracement, which is effective, is a form of pricing at the start of the recession? I tend to tell you that here we are still in a setup where we have broken a lower. Here we made a lower. There we make a top, which is lower than the previous one. So we will have to see if we validate well with the break here of the 14,500, in which we will have well an approach, which will be the start of a short-term downward trend to validate, in fact, here potentially a recovery. So we would classically here have a break. So we make a higher high. We will retrace, make a lower, which is higher than the previous. So we have here a structure which will be bullish. So there we would have our start of recession in which we would have a validation of the recession. We would have here during the recession solo, which would form, and then we would start again on the rise with a forecast of the exit from recession 6 months, 9 months before. So for me, we are actually going to start this cycle, and as usual, we will have the announcement of the recession once it is over. But we are starting to get used to that in relation to the different indices that we could already see on the channel during different Saturdays. So what will happen in BTC? And I'm just going to focus on 2 points. The first, the validation of the trend that we are having. And you will see that there are already indices which are in the process of positioning themselves. And secondly, we are going to talk about liquidity because clearly we had a week which proved to us what is happening. The notion of manipulation that is taking place at the level of the different liquidity because there is no liquidity at the market level. So we are obliged to create liquidity. We are obliged to sweep away liquidity. We are going to discuss these 2 big points. First thing, we're going to start on this area and this weekly close that we have at the BTC level. Look at me on this CME that does a Monday-Friday close. We had 0 movement. That is to say, we closed at the same place as the opening of the candle. And that's really symptomatic of periods of lethargy. And we can see that we had already started from May, where we had candles which are very unlikely, in fact, on BTC. Basically, we are in something at the level of BTC, which is volatile, in which when we have a day at 1, 2, 3%, it is not normal. Normally, we are something that evolves over a week with less than 5% volatility. This is not the case. We are in something that is lethargic. And so this implies here that there is a need for volatility to be and remain profitable. Keep this idea in mind. We're going to go because it's really purely the notion of liquidity. And that was really seen this week when we look at daily here and we really look at the analysis. We see that we have a class that is lethargic in which we don't move at all. We then have movements which are very strong. We are not going to talk about that because it is really grayscale and the facelift of grayscale. But when we really look at the movements that we had, for example, here, this movement of liquidity, we went look for high liquidity, we retraced, we broke low liquidity, we rebuilt liquidity, we went looking for it and we broke it down, lowered it, and we are in the process of rebuilding it. And that's something that we find during all these periods. The best way to see it is to look on Coinbase, the heat map liquidation part. We look weekly. What do we see? We can clearly see here the construction of liquidity. So liquidity is precisely the yellow bars that we see here, where we can clearly see that more. Time passes with very few movements. The more we have liquidity, which accumulates gradually, therefore people who take a position either short or long, therefore who position their stop loss in these zones, there. And we can clearly see that we are then going to liquidate the upper parts. So we have liquidated this whole block. We have liquidated this whole block upstream. And what happens? We can clearly see that here we are rebuilding liquidity. Look closely at the movement of liquidity. There is nothing there, but from that moment on, we are starting to rebuild liquidity again. Once presto, we'll go and get the higher liquidity. We have rebuilt enough nearby liquidity to be able to go get them. Same here, a bearish movement in which we rebuilt nearby liquidity to go short. Exactly the same way we made this movement. And there, what is very interesting is that once we have done this lateralization, we created liquidity at the top. Okay, but above all, we created liquidity at the bottom that we went search and we land it. And then what happens? We can clearly see that we have the creation of liquidity, which is taking place. And what is interesting to see, above all, here we zoom out a little, is that when we look at the start of this movement, until this movement, where is the liquidity? The liquidity that has been created the most is the lower part. When we look closely, we see that here we have had the construction little by little throughout this movement also of the low liquidity that we have precisely recreated. And we see clearly that we had a whole part which was built here and which is still present here. We really have a lot of liquidity. We have much more liquidity than at that time. We have almost multiplied the liquidity by 1.5. While on the short liquidity, we have reduced a lot. We have raised the liquidity, therefore liquidity, which was no longer there. We can clearly see that we had nothing there. This liquidity came back here and we precisely recreated the liquidity in this part. So what is interesting to see is that we are starting to have a pattern which tells us that we risk having a return of short-term volatility. Why am I telling you this? Because for me, we have key levels which are, one, this level of 27,000 for a bearish retest in which we will accelerate to retest, to start bearish again. But to do this, we need liquidity. That is to say that right now, we know that there is no injection of new liquidity. We have no fresh liquidity. There is no interest. There is no person currently joining, and we'll see that right away. This can be seen in a daily view in which we see the volume which is being completely lost. And what do we see? We see momentum building. It is not normal. We have momentum that is increasing, volume that is decreasing, and we have a price that is flat. Well, in this case, we have a symbol here that we are going to eat a new bowl. We're going to eat a new bowl because here we had the RSI, which fell very low, and we have an RSI which is slowly rising into the 50%, while we have a price which is in the process of being totally flat. So we have momentum that is growing, a price that is flat. So that implies that we have bearish pressure that is increasing, and that is in fact simply maintaining the price. At this level, we clearly do not have enough buyers, so there we have a form of weakness which is taking place, and this is exactly what we are seeing here. So for me, this that we risk seeing it will once again be manipulation to chase liquidity, to create a movement, because we do not have enough liquidity injection and we need to have movement. When we say it implies several people, it mainly implies for me. Success, DEX, and market makers, because there is an interest there. I remind you of the definition of market maker that I gave you last time. I'll tell you very quickly if you want to watch last week's video. In the sense that the market maker, what is interesting for him is, it's not that the price is high or the price is low. He doesn't care at all. What he wants is for there to be movement, for there to be volatility. He gets paid mainly in the form of a transaction, which is the same for centralized exchanges. If there is no volume, well, that means there are no fee. If there are no fee, that means there are no cash coming in. And so the more we will create effective movements like that, the more we will create the liquidation. And on the liquidations, there are costs which are impacted, which are approximately 10 minus 15%. Finally, between 5 and 15%, depending on the different platforms and different decks, because decentralized exchanges also have costs on these parts. So we are in this process where at a given moment, we have to get out of this lethargy to be able to generate costs. And it is a question of survival for certain actors. And it's a little bit there when I see what happened here. Clearly, I say to myself that this is not a classic movement of the course. So here we are really in something which is really particular. We create a lethargic zone. We rebuild liquidity. We make a bearish movement to liquidate a first part, strengthen the upper liquidity to be able to liquidate the next one. We make a lethargic movement to strengthen the upper part to then liquidate the upper block. And then we clearly prepare to liquidate the lower part and then reliquidate the upper part. When we see movements like that, we really have to be very careful because it implies that they're the zone of neutrality that we have been seeing already for some time, which is good. Presented by this type of candle, well, it is not suitable for certain sectors. And so at a given moment, we will have to create a movement to be able to do so. And I think that this movement will be driven by here, an upward movement to then prepare a bearish movement to precisely break these 25.2 and go return to more or less the 23 until 18, our reload zone, in which it would be consistent with what we are currently seeing on the NASDAQ, which is currently, to see yourself on the SPA minus 500. On this, I'm just going to put a little warning on two things because it's really important. I'm not green. I'm totally upset. It's just that I consider that here we are in a short-term trend, which is mostly bearish. We have no liquidity. We have a problem to resolve. We need to return to a price which is currently interesting. This is not the case. We are between two. We don't really have any decision whatsoever at the macro level, whatever. At the level of BTC and crypto. So we are in a moment where we need to create liquidity. To create liquidity, we must either have a price in such an important meteorite cover, the price, in fact, we don't really care, or next to a price that is attractive to attract investors. This is not the case, and I tend to think that we're going to have a recession, so necessarily an effective retracement before starting again on a cycle, I am not at all bear. I don't think we're going to go to 10-0. I don't think we're going to go to 5-0. In any case, there is nothing that fits in with this perspective to reinforce this bias. In any case, my current bias. Obviously, it will evolve according to the different clues that we can see in front of us. Technically and fundamentally, there is nothing that fits into this bias. Second thing, which is important, it is not because for me, my strategy and my short-term analysis define me that in the next 6 months, 9 months, we will potentially have an effective retracement, which we will inevitably have. Control your exposure carefully. I see a lot of comments saying yes, but I'm waiting for us to come back down to be able to buy. So think carefully. Is your exposure correct? That is to say, are you currently at a level where if the price ever goes up, you are ready to accept being on the train? Are you on the train or not? Are you ready to accept the fact of not being on the train if it ever goes up now? Same reciprocally, won't your level of exposure impact you if we ever do a minus 20%, minus 30%, minus 40% at the level of altcoins and at the level, why not, of BTC? Are you able to accept this? Are you capable of not overreacting precisely by capitulating? Are you in this process? For example, are you able with your current exposure to accept a BTC at 15.0 and a minus 50% on altcoins? This is important because the level of exposure is what will determine whether or not you will react in a way that totally aberrant on emotion. And this is where you need to control your exposure. Is it the most optimal, at least for you? That's really it. It's not a question of optimal for a question of price. It's optimal in relation to how you will sleep at night. And that's really important. And that's where you really need to focus. The second thing, finally, third thing, a little extra, is that even if for me we have an SPF 500 and a NASDAQ which take a slice, therefore which take less, 30%, that's why I stay on the NASDAQ. That is to say they come here and they take a minus 25%, or even why not a minus 30, minus 35%. Okay, so we're going to break the low. Will we have the same thing on BTC? Will we have, as we were able to know here, a ratio of 5? So that is to say I lose 1 point on the NASDAQ and I lose 5 on the BTC. I don't think so. Clearly, I don't think so. It was proven by something that is really very simple to see, is that we are going to look at this candle of this week. We had even the last 3 weeks. We had 2 upper candles and 1 lower candle. Okay, we are going to take out the BTC. What is it happens? We see that we are totally different. We see that here we are in a plateau. We have not had any movement, whether bullish or bearish. And so it's interesting to see that we are in a form of decorrelation between BTC and traditional financial indices, and which is at the same time logical. Because on the other hand, we have a macro which is unstable. So that means that many institutional players have reduced exposure to risky products which can be compounded. Why not cryptocurrencies, I want to say? We must forget that it is not because people do not buy cryptocurrencies that in the composition of the complex financial products that they have, there are no crypto assets in them, okay? So these are 2 things that are separate. And next to it, we have an event endogenous to crypto which is pending. We still have 2. We have 1, the SEC with ETFs, which is very important. And 2, we have the SEC with the notion of security, which mainly plays on total 3, which is totally flat. I mean, when we look, we are totally flat because mainly we are waiting for this decision. We are waiting for something on that side. And that's also why BTC itself reacts relatively little, because we're expecting these elements. I think we won't have them right away. We'll have a reaction in relation to a real movement on the OSP 500 and the NASDAQ. But it will be a movement which will be moderate and which will be manageable and which is at the same time coherent in relation to everything that we have known in the different periods of bear market. And so for me, we are in something classic, and we are, despite the recession, despite inflation, despite the crisis that we had, in something that is truly classic. I will conclude, to return to this notion of exposure, it is up to you to determine whether you are overexposed, underexposed, based on the probability of each of the scenarios that I have already been exposing to you for some time. This is why I am present in the daily newspapers. This is why I continually provide you with content to show you precisely that it is something that evolves over time and that you must follow systematically to readjust depending on the evolution. Numbers, because it is something that moves, it is something that is human. Let us not forget that charters are precisely a human reaction to facts. And that's really important to remember, so it's something that's alive. And so obviously we must systematically follow, because a scenario can be invalidated overnight depending on different news. And we can only predict the probability of that happening without necessarily going into it. I hope you liked this video. If so, don't forget to leave me a comment. It always makes me very happy. If you have any questions in the comments too, I try to answer as much as possible. And of course, don't forget to leave me a like. We'll meet again tomorrow for the continuation of the video from the previous week, in which I will make a series of halkany to give you the important areas if we ever enter a recession in the USA, in which it could be interesting to reload on the different projects. And we will continue until I have processed all the projects that you have proposed to me. And so we'll see you tomorrow at 8:30.